wish everyone a very happy and prosperous new year. While we had an eventful 2025 with the background being of wars, both on the battlefield and war by other means such as tariffs, the capital markets took all that in their stride. This in part was driven by a very resilient global economy. The world economy is predicted to have grown close to 3% in 2025 and should grow at that rate as well in 2026. The other part driving global equity markets was the optimism surrounding AI. Indian markets, for a change, were relatively subdued and did not participate in the AI trade. For investors looking at the Indian markets, there are three takeaways which will have a bearing on the year ahead. Number one, Indian macros have been under stress many times over the last few years and have been stress tested successfully, whether it was during COVID, the Russia-Ukraine conflict, or the recent tariff onslaught. We believe that the Indian macros will continue to remain equally robust in the year ahead. Additionally, we will be keenly watching for the impact of various fiscal and monetary policy measures already taken in 2026. Thus, we'll be looking at the strength of revival in the domestic credit upcycle, as also the robustness of the real estate cycle. Direct and indirect tax breaks have already supported a strong bounce in the automobile industry. In 2026, the sustenance of the same, as well as revival of consumption across other discretionary categories, will be watched for. The contractionary impact from fiscal consolidation of recent years should reduce in 2026, as the central government will possibly move away from fiscal deficit targeting to government debt as a percentage of GDP targeting. The second takeaway is that over the medium and definitely over the long term, valuations do matter, as does the earnings growth outlook. In markets in 2025, whereas it was in part driven by the starting valuations, especially in the small and mid caps. However, after this bout of time correction, valuations relative to other emerging markets have become more reasonable. Additionally, earnings growth outlook for 2026 is clearly looking better than for the period of 2025. Big sectors like banks will contribute to this. The third takeaway is that the health of the Indian equity markets remains robust. If the DIAs have been buyers, FIIs have been aggressive sellers in 2025. In fact, FII holding of Indian equities is the lowest in more than a decade. Thus, there are no extremities in the market at the start of 2026, either in terms of aggregate valuations or buying-selling behavior. Further, the health of the underlying corporates has never been better. Not only is earnings growth looking up, but the quality of earnings is also improving. Corporate leverage is at the lowest level in a decade, while corporate ROEs have been steadily picking up to a respectable 15% levels from the sub 10% lows a few years ago. In terms of risks, we feel that bigger uncertainties could arise from outside India. We live in a fairly dangerous geopolitical environment where economic interdependence exists even as major nations pursue complete economic security. This can cause friction and has the ability to spill over from economic to actual physical warfare. For India, the ongoing tariff costs have been disproportionate to other nations in the region. This has put select Indian industries at a disadvantage. However, the resolution of tariff challenges with the US or FTAs with other economies such as the EU or the GCC bloc can mitigate this concern. Similarly, a correction in the global AI trade at some point in 2026 might cause volatility, but should be well absorbed by Indian markets. We believe it is important for investors to invest in equities with a long-term investment horizon and with the discipline to stick to their investment plan. This way, investors can benefit from the power of compounding. Additionally, it is important to have an appropriate asset allocation suited to each one's risk profile. With that, wish you all once again a very happy and prosperous New Year 2026. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.